The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
I accept your nomination to be President of the United States of America.
Kamala Harris makes history becoming the first woman of color to top a major party ticket and taking aim at her Republican rival Donald Trump.
Donald Trump is an unserious man. But the consequences of putting Donald Trump back in the White House are extremely serious.
Treasury yields rise and U.S. equities retreat ahead of Fed Chair Jerome Powell's big Jackson Hole speech as policymakers signal support for a September cut.
There is some room to consider where we go from here, but I frankly think we've got time.
What matters is we start to bring rates down. That sets the expectation. It's not about the rate today, it's about what the rate's going to be in the future.
Japanese inflation ticks higher as BOJ Governor Kazuo Ueda continues his hawkish signals, telling Parliament he stands ready to raise rates again if the data stays on track. And Nestlé CEO Mark Schneider steps down amid persistent underperformance, with company insider Lauren Freixe set to take the reins of the world's largest food and beverage company next month.
Welcome to what is a packed show today. A lot on monetary policy as we look at Jackson Hole, but clearly a lot on the politics too. And let's start there, as Kamala Harris has formally accepted the Democratic Party's presidential nomination, making history as the first woman of color to top a major party ticket. Harris's speech closed out a Democratic National Convention aimed at introducing her and vice presidential candidate Tim Walz to the nation, just over 2 months ahead of polling day. NBC's Bree Jackson joins us from the DNC in Chicago. Bree, it looks like a huge amount of energy.
Oh, absolutely. It was a huge amount of energy tonight. In fact, we saw that all week. And tonight was truly probably one of the biggest, if not the biggest speech of Kamala Harris's life. She expressed gratitude to President Biden and also shared her personal story and talked about her commitment to serving others and also moving the country forward. History made, with Kamala Harris officially accepting the Democratic Party's nomination for president.
I accept your nomination to be President of the United States of America.
A sea of white honoring women's suffrage and the first woman of color to lead a major party ticket. Harris sharing her personal story, including the powerful influence her mother had on her life.
And I miss her every day, and especially right now. And I know she's looking down smiling.
The self-proclaimed joyful warrior laying out her vision for the country if elected.
I promise to be a president for all Americans. You can always trust me.
Capping off a week filled with stars, singer and passionate activist Pink, speakers highlighting the 59-year-old's professional career as a prosecutor and senator.
Kamala Harris can't be bought, and she can't be bossed around.
Supporters taking direct aim at her rival, former President Trump.
Our fallen veterans are not suckers. They are not losers. They are our heroes.
Civil rights leaders highlighting her commitment to helping all people.
We fought hard for LGBTQ loved ones to get out the closet. We won't go back.
Harris says she's ready to lead the country toward a brighter future. The candidate who just recently stepped into the role, seeking the highest office in the land. And the Harris-Wallace campaign is looking to take the momentum from here at the Democratic National Convention back to the campaign trail, where they'll have just over 70 days to make their case to the American people.
Reed, thank you so much for that reporting there. And I mean, a really interesting commentary, because a lot of this is going to change and a lot of things could certainly happen. But Rob Casey, partner and senior analyst at Signum Global, joins us now as we get a little bit more into this then. Rob, was that the speech of Kamala Harris's career then?
Yes, I absolutely think it was. It was somewhat reminiscent of the speech of Barack Obama's career in 2008. It was absolutely the speech that Vice President Kamala Harris needed to maintain her position in this race and sustain the momentum that she has moving forward.
Yeah, we've also heard some notions then regarding the VP's policies, even everything from middle class tax cuts as well. How do you think her policies then are said to be received, particularly by those who haven't necessarily chosen who they would actually vote for in the ballot in November?
Yeah, what I think the Harris campaign recognizes is that this is a sprint to the finish. This is, what one might call in the UK or in Europe a snap election. Most of the time in the US, our presidential elections are campaigns over months, if not years. Harris's campaign is being run in 90 days. So I think one fair criticism of her campaign to this point has been she's been a little bit light on policy details. She's hewing very closely to what President Joe Biden has done and was projected to do in a potential second term. But even as Harris got into policy conversation in the very good speech tonight, she was still pretty light on details. So I don't think it's the policy that's going to win or lose for this race. I think the question is whether or not she can maintain the momentum that she has picked up over the past 3 weeks into November.
Rob, we heard in this speech from Kamala Harris that she's talking about rebuilding a strong middle class. And I want to pick up on middle because I feel like that's what she's aiming for, going for the middle class vote, but also targeting middle America, where we don't forget the Rust Belt's been left behind, but also the middle ground, the center ground of politics. Just talk us through the positioning here.
Yeah, absolutely. The Harris campaign knows that they need to do very well in blue wall states. Particularly, they really need to win Pennsylvania, Michigan, and Wisconsin. Now, Harris is doing so well in the Sun Belt states, North Carolina, and states farther south, that she doesn't have to win all three of those blue wall states, but it remains the easiest path to the presidency for her. So, it's not a coincidence that the DNC is being held in Chicago. Of course, Illinois is a blue state, but very close to Michigan and Wisconsin. It's also not a coincidence that Harris's running mate, Tim Walz, while from Minnesota, also a blue state, is from, generally speaking, the Midwest. I mean, these are states that the Harris campaign is targeting 100%. They're the utmost priority. And so I think, not only did we see the DNC granted, Chicago is a big urban city, but generally speaking, in the Midwest, I think we'll continue to see the Harris campaign really put roots down in the Midwest between now and November.
Rob, if you look at the numbers, we can see the wealth and income inequality has risen in the United States, the worst in developed nations. What do we see in terms of that fight for those who do feel left behind? And we've seen it from the MAGA side, but what do the Republicans need to do to counter now the Democrats and Tim Walz here?
Well, what I think we've seen for President Trump, really since his campaign in 2016, is an incredible, almost unique ability to really speak to Americans, especially white working class Americans, especially male white working class Americans, who have felt that they've been left behind. President Trump has done that incredibly successfully during his campaigns. I think we saw Joe Biden sort of take that narrative back for the Democrats to a certain extent in 2020. He was aided, of course, by the COVID crisis. So I think Harris's policies and her campaign is really a question of speaking to, moving beyond Donald Trump. How can Democrats bring those white working class voters back on sides, not only running a campaign of, derision and criticizing Donald Trump, although we certainly heard that in Harris's speech tonight and throughout the DNC this week, but also the question is, can Harris and her campaign, can Democrats generally speaking, lay out a path for the future that is appealing to these voters who feel as though they've been left behind?
Yeah, Rob, I mean, one of the other impacts to look out for, especially when the race is so tight, is the impact of Robert F. Kennedy Jr., particularly in those swing states. What is your assessment of how he could swing things, if at all?
Yeah, we've heard rumors all week that RFK Jr. is going to drop out of the race tomorrow and is very likely to endorse President Trump. Those rumors aren't confirmed, but I do put a lot of stock in them and expect RFK will drop out tomorrow. The thing is, initially, when this campaign was being run between Joe Biden and Donald Trump, there were a lot of voters, we call them double haters in the United States, who were eager to vote for anybody else. And in that moment, RFK was getting 14, 15% in national polls. Today, he's getting less than 5%. So his campaign has really not maintained any sort of momentum. And in fact, he's really only getting a third of the support that he was just a few months ago. So while I do think, the Kennedy endorsement of Trump potentially tomorrow, very likely tomorrow, it is an attempt to kind of take away some of the momentum that Democrats have gained over the past few weeks, and especially this week at the DNC. I don't think RFK commands a very big base. I don't think he commands a very unified base. And to the extent that his dropping out and endorsing Trump is a benefit to Trump, I think that's probably true at the margins, but I don't think it's going to be a deciding factor in the race.
Rob, I want to turn to the economics here because it's very likely we're going to hear word today about the potential for an interest rate cut prior to the election. The market is looking at whether we get a 50 basis point or 25 basis point rate reduction in September. If we do get a move, and if it's a larger move than the market is now shaping up for, who does that benefit? Because you could argue it might send a negative message about the Fed seeing some sort of incoming storm for the economy if it's a larger sized rate reduction versus a 25 basis point. So what are the benefits and negatives here of any rate cut prior to the election?
Yeah, it's really interesting what we'll hear from Chair Powell later today. That being said, I think we're so close to the election now that we're essentially out of the danger zone for Democrats. We're not going to the campaign is not going to be run on whether or not our economy is in or is going into a recession. So we're kind of past that chapter of the campaign. It was certainly a risk to President Joe Biden, 6 or 12 months ago. But at this point, regardless of what Powell signals, I don't think that the election is going to be decided on Fed policy. Although I think, at the margins, if I were to lean one way or the other, I think the Fed signaling a cut and certainly implementing a series of cuts over the next few months, I think it's a positive tailwind for Democrats. I think for anything that Joe Biden and now Kamala Harris are able to point to suggest that things will get a little bit easier, a little bit better for Americans, whether they're trying to get a home mortgage or what have you, anything that makes it a little bit easier over the next 2 months is going to be a tailwind for Democrats.
Rob, thank you very much for putting that into perspective for us. We do appreciate the analysis. Rob Casey with us, partner and senior analyst at Signum Global. Now, on the data front, another piece in the puzzle. US weekly jobless claims ticked slightly higher last week to 232,000, in line with the gradual cooling of the labour market. Meanwhile, composite PMI edged lower to 54.1 in August, according to flash data, still better than expectations. Flash services PMI also grew, but manufacturing output declined to 48 in the same period. So, of course, that's contraction territory. Arabile.
Okay, let's take a look at this market picture then yesterday, right? So we were up one day, down the next, and now it seems like we're down again then. So it's keen question marks to kind of find out exactly what is shaping things along. We're headed towards that Jackson Hole speech then by Fed Chair Jerome Powell, and that will be quite important to this market picture because the assessment certainly has been that a rate cut is in play. We've actually even heard from Jeff Harker as well, of course, just giving out his sentiment. We've even heard from Susan Collins, the Boston Fed president as well, really relaying how they seem to be ready for a cut. And of course, this is dependent on whether the data continues to move in the same trajectory and the same way then. The other one, however, to really look out for is just about whether there is more data to be had when it comes to this entire conversation then, because Kansas City Fed Chief Jeff Schmidt still wants to see more data before voting for a cut. That's very interesting to really note because more data just means that that jobless number that comes out for August could be quite pivotal to how things fare from here. But a downward trend then in yesterday's market movement, 1 2/3% weaker. It was again those tech players that actually saw a massive decline, their biggest decline since August the 5th, where we saw that big slowdown. On the Treasury front then, bond markets rebounded from what was a 2-week low. Investors, of course, awaiting that sentiment then from Jay Powell then a little bit later on today. 3.84 for the 10-year note. Just below that 4% mark then for the 2-year note then. Of course, keen question marks on when that rate cut comes but it's also about how much that figure really is. On the dollar cross front, a rebound then from a 13-month low for the dollar, particularly against the euro then, just before that speech then in Jackson Hole. But you are seeing sterling then hit those marks of 131, in fact, now. So a significant uptick on there, just shy then of that 13-month high that it actually hit yesterday. 111.26 as well then is the strengthening of that euro against the dollar. And dollar yen, there you see it now, 145.71, still below that 146 mark. On the commodity front, oil prices steady, but they are still set to end the week lower amid downward revisions, of course, to that U.S. jobs print that we saw then earlier this week. It did raise a few demand concerns then on the oil front. Also, ceasefire talks then in Gaza also continuing to ease supply worries. So you're seeing a pretty steady mark, $77.27 for Brent crude. Spot gold has dipped below that 2,500 mark then, but it's still set for a weekly decline after slipping from those record highs. So Japanese core inflation, though, that hit 2.7% in July. It was in line with the expectations, but accelerating for the third straight month. The Bank of Japan's governor, Kazuo Ueda, told the Japanese parliament that the central bank will continue to aim for further rate hikes, but only if growth and inflation stay in line with forecasts. What does that mean then for the Asian market this morning? Pretty mixed picture, as you can tell then. Still staying the course then is what the Bank of Japan's governor has been putting forward. The Nikkei 225 then up 0.33%, while 0.33% weaker though is the Hang Seng moving in the opposite mark there. On to your opening calls here in Europe. Yesterday, we saw stocks manage to find another positive day. In fact, you saw major bourses and major sectors in the green, even retail stocks finding some momentum there, moving more than 1% higher. In fact, the Stock 600 hit its highest level since August the 1st. It's also its seventh positive day out of the last 8. Today, we look like we could also begin to head a little bit higher, although the DAX does point along that flat line. In U.S. futures, of course, all eyes still on Jackson Hole then a little bit later on today, but the market looks like it could rebound from that slight negativity we saw in yesterday's trade.
Ahead on the show, all change at Nestlé as CEO Mark Schneider steps down after 8 years at the helm. We'll bring you all those details next. Plus, all eyes turn to the mountains of Wyoming for Jerome Powell's speech later today at the Jackson Hole Symposium. And we'll discuss what to expect from Powell's big speech with the official Monetary and Financial Institutions Forum Chairman, David Marsh. Don't miss that chat at 7:30 CET.
CNBC Connect is back in Bangkok, Thailand. Join the world's top entrepreneurs and C-suite executives for an invite-only leadership retreat. On the agenda, powering innovation and growth in Asia. Is AI transforming industries and creating opportunities? And get insights on building sustainable and resilient businesses. Be part of Managing Asia Live. Network and join an interactive brainstorm session. CNBC Connect, powering innovation and growth in Asia on September 4. Register now.
Nestlé's Mark Schneider will step down as CEO after 8 years at the helm. He'll be replaced by company veteran Lauren Freixe from the 1st of September. Schneider oversaw a boon for the company during the pandemic, but the world's largest food group has since struggled to maintain momentum, with shares having largely been on a downward trend since May last year. Freixe, who has been with Nestlé since 1986, has sat on the company's executive board for 16 years and has previously led the company's European, Americas and Latin America units. Let's bring in John Cox, who is head of European Consumer Equities at Kepler Cheuvreux. John, thank you so much for joining us. After 8 years at the helm, it may seem like it's time for a shuffle in terms of the C-suite executive, but this does feel like it's come very suddenly, the new CEO taking over in just over a week's time. Does this raise some alarms as to how the board sees the current performance of the company?
Indeed, I've always argued that the life of a CEO tends to be either a 3-act or a 5-act play. Mark Schneider was deep into the 3rd act, but if you look historically, the board has always given its CEOs time to turn around problems. And just remember, just we hit a record high of Nestlé over 125 francs per share just two plus years or so ago. So it isn't that long ago when Schneider was really seen as the man and doing a great job at Nestlé. But of course, in the last couple of years, a couple of things have happened, both self-inflicted and also sector-wide. And I think the board have just run out of patience and decided now's the time for change.
Let's get into that. A couple of mishaps just in recent months around earnings. So there was an earning disappointment weighing on the share price in the past year. There was an integration of sales, an IT system that impacted some of the sales of the business as that tech system was rolled out that caused delays to supply chains for vitamin supplements. And then regulators also looking at the company for using illegal purification techniques on bottled mineral water. So a couple of missteps here. But it doesn't change the overall direction having an insider now come in. What sort of shift could we see that would fix any of these issues?
Well, I think you have to look at it in terms of the historical context. Schneider was the first outsider CEO being brought into the company in literally over a century or so. Very, very rare. Nestlé typically appoints its CEOs internally. Its CFOs typically come externally. So now we've gone back to sort of basics. We've gone back to a 30, 40-year veteran at the company. I think what you'll see is a company will come back to its midterm guidance, its 4 to 6%. This is part of the problem. We've had a profit warning. We've had a slowdown in growth, even after a lot of radical portfolio change over the last few years when Schneider promised to accelerate growth on a consistent basis. So I think there are some things to sort out. Personally, I think this is always going to be a year of transition for the whole food sector, where they're all struggling with consumer fatigue in terms of those price rises. Prices are compressing. They can't get volumes going. There's down trading going on. But as we saw, even with Q2, Nestlé's volume has accelerated pretty dramatically, pretty strongly. It's that price component that really hurt them. So I think it will come good. Now, what will the new CEO do? I think certainly he'll be sort of like looking to stabilize the ship, reassure the market. There's nothing untoward. I don't see any sort of margin reset. But certainly, I think they will look more at the portfolio. Some of those businesses, traditional packaged food, unhealthy traditional packaged food, is literally going to go the way of the dodo. I think they're going to look at their frozen foods business in the US, which was the problem this year for them. I think they may even look at their confectionery business just to refocus on what they do best. That's coffee, it's pet care, it's nutrition.
Look, one thing I can say, John, is that you've covered so many aspects there that I also wanted to touch on. But just to add to this, though, how much of the problems were also just the high inflationary environment, i.e. meaning that as it now begins to moderate, as interest rates now begin to moderate, that fatigued consumer would have been able to catch up at some stage and actually helped to turn the business around and perhaps would have ridden that wave too?
Yeah, personally, I thought the board would give Schneider at least through this year to see where we are at, because as you say, pricing is moderated, but nobody's talking about deflation. Everybody's assuming that there will be, low inflation, a couple of points maybe in the developed world, 4 points in the developing world. Therefore, you get 3% pricing in an average FMCG with international exposure. We're not there yet, but this is a way I think things will play out. And so Schneider is a bit unfortunate this has happened midway through what should be a turnaround year. I can only assume that if you look at all of the things that have happened over the last 2 years or so, beginning with the write-down on the peanut allergy, billions of dollars written down. That was an acquisition. He was responsible for the problems integrating the consumer health businesses. Again, these were businesses that he bought. And then most recently, a couple of profit warnings, which have weighed on the shares. I think confidence has been severely hit in the case, and particularly in Schneider. I think actually the stock is likely to come under pressure this morning. We saw overnight it was down 5% in the US market, but you may find it stabilizes. We have a call in the next 30 minutes or so with the management. We'll have to hear what they have to say. But I presume most people will think it's not such a bad thing at this point for Schneider to go.
Yeah, Freixe has also said that he would focus on the core business, having just read an article here on Reuters actually saying that he would focus on the core business, but he isn't writing off M&A activity. What exactly do you think the core business then entails? I know you've spoken a little bit about the pruning that may indeed happen at the business here, but what is that core business now going to entail? And what M&A activity are you expecting then from Nestlé here?
Well, I think the whole sector is about to go through quite a big transformation in terms of M&A. I think the starting gun was fired was that Mars Kellanova transaction announced a week or so ago. I think Nestlé will take advantage of that to actually dispose of businesses. Now, the big question is, what sort of acquisitions will they be looking for? They have the strongest balance sheet in the whole space. If you take into account the L'Oreal shares, they can afford pretty big transactions. Now, I've always thought that one day, ultimately, Nestlé might be interested in Danone. Danone has the healthiest portfolio in food. It is benefiting for, big structural changes going on in the food market. Maybe Nestlé would look at that. Would investors really welcome that? I'm not sure. I think what they want to see Nestlé do is get back to 4 to 6% growth with moderate margin improvement, do what it's done historically, become a long-term compounder before it goes and embarks on big bang M&A. But certainly I think disposals will probably come first, then potentially maybe down the road looking at bigger deals.
John, I hear you around the Mars and Kellanova tie-up because it does feel as though they're going for more market share, and that's something that's come up here around Nestlé and its market share. How does it achieve that short term? We've got a CEO coming in who's got experience around some of the growth markets of Latin America. Is it going to be those corridors that build market share from here, given the Western trends towards healthier eating?
Yeah, I think actually one of the reasons why he selected, he has a very strong track record. He ran the whole Americas business before Schneider came in. Remember, he was in the running to actually become the next CEO at Nestlé back 8 years ago when Nestlé went for the external appointment. So a lot of experience in that market. North America at the moment is ground zero in terms of the problems facing the packaged food industry. A lot of it is going to be transitional. As I said, this is going to be a year of transition for the industry because consumers have been struggling on the pricing. However, there is a big structural component. The number of people in the US already taking GLP-1s is 6% of the population. I read most recently in a survey. I was assuming that would be the peak usage in about 10 years' time. That group of consumers is eating less fats, less carbohydrates, and they're eating more protein. Most of the food companies out there recognize that and need to change their portfolios accordingly. And this is where I think basically you'll find that Nestlé maybe starts to think about, protein products it can launch into North America, getting out of some of that, frozen snack business that they have, which is under pressure. And I think these are the things that they'll be looking to develop over the next few years. Remember, they have a lot of expertise in nutrition. They have a big medical nutrition business. They have a consumer health business with the vitamins, etc. These are the things they'll focus on to drive growth, I think, going forward.
John, there's so many elements there. It just gives an interesting aspect to where exactly this company could go. Indeed, even the sector as well. Very interesting one. We'll see how things fare then, and we'll see a call on your market picture as well as the market opens here in Europe. John, appreciate your time this morning. John Cox, the head of the European Consumer Equities then at Kepler Cheuvreux. Now, AstraZeneca is reportedly warning that it could move its vaccine production from the UK to the United States. And that's due to disagreements with the new Labour government over state aid. That's according to the Financial Times. Now, the report says UK Chancellor Rachel Reeves wants to cut state aid provisions to Astra's vaccine centre to £40 million. That's down from the initial £90 million that was pledged by the previous government. An AstraZeneca spokesperson told Reuters the company is in constructive talks with the new UK government and that there have been no discussions about other manufacturing sites.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.